The classic debate: should I buy a home with that money or should I invest with that money? I bought my first house right before the pandemic in 2020. Within 3 years, I had built over $150,000 worth of equity just because I had owned the home and the house price had gone up so much. My down payment on that home was about $30,000, so I 5x'd that investment within 3 years. When I bought my second investment property in 2023, things were much different. There's so much that goes into this original question, and so this video is going to give you all the things that you need to consider when you're trying to make the best decision possible for what investment is best for you. The spoiler alert here is that the answer is not cut and dry, and it's not going to be the same for everyone, so make sure and listen up. I used to think that renting was just throwing money in the trash, until I ran the actual numbers, and now my mind has changed drastically. My name is Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. So Ramit Sethi of I Will Teach You to Be Rich does a great job with his explanation of this topic. He starts off by comparing the fact that house prices have generally appreciated at about the same rate as inflation, and that we as investors or home buyers need to take into consideration a bunch of other numbers.
In terms of returns to something like investing in the S&P 500.
It's quite poor, actually.
Really?
Yeah, over about 100 years, there's great research showing that it has essentially matched inflation. It's been slightly above inflation. People find this mind-boggling. Again, because they think somebody bought a house for 100K and they sold it for $1 million, so it's 900K. But they don't properly factor in inflation, opportunity costs, phantom costs, all that. It's really hard to factor these numbers in, but it's critical because it's the biggest purchase of your life. I'll give you another example of where people don't properly factor it in. Some people pay a financial advisor 1%. They go 1%. It's not a big deal. I'll pay 1%. What they don't realize is that that 1% over the course of their lifetime will take 28% of their returns and hand them over in fees. Think about it. If you make $1 million in investing over the course of your life, $280,000 are going right out of your pocket into that advisor's pocket. Now that's super counterintuitive. 1% turns into 28%. How does it work? You can simply go online and search for investment cost calculator and plug in the numbers, add a 1% fee, and you will see. The point of this is that sometimes money is highly counterintuitive, really counterintuitive. It's unlike anything else. If you spend more, you don't get better returns. You don't get better anything. In fact, if anything, you get worse returns. People find this mind-boggling because it's counterintuitive. But in investing, costs matter. In buying a house, you've got to run the numbers because they are totally counterintuitive.
First of all, the point that he was making about lifetime fees to a financial advisor is just disgusting. So keep watching my channel to invest for yourself and keep things simple. But for the topic of this video, there's so many things that we need to factor in when we're trying to figure out what's the best way to invest our money.
The popular narrative is, for most people, the minute they get any decent amount of money is to buy your first house. And that's what people do. They take a 10% deposit or a 20% deposit, whatever it might be, and they buy a house. Why is that a poor investment? Why is that a bad thing to do? Because that does kind of sit counter to the popular narrative.
Well, we have to remember, first of all, where the popular narrative came from. In America, if you ask people what is the American dream, the answer is inextricably tied up with a single family home with a white picket fence. That's not an accident. That is the result of decades of messaging. Some might call it propaganda. First of all, most people in the world do not live in single family homes like we do in America. That has caused a lot of issues. But to leave that part aside, this is how most people think about buying a house. They think grandma bought a house in Austin, Texas in 1970 for $100,000. Grandma just sold it 50 years later for $1 million. Grandma made $900,000. They go, it's the most profitable thing you could do, buy a house. I go, okay, that sounds really nice. Did Granny factor in how much she spent on maintenance for the past 50 years? No. Did Granny factor in inflation and how that affected her return? No. What's inflation? Did Granny factor in the opportunity costs? of what that down payment could have been used if invested in the S&P 500? No. And did Granny look at all these phantom costs such as interest on the loan? No. It's not simply the bigger number minus the smaller number. That's wrong.
So there are many costs associated with buying a home, as he stated there. He also talked about opportunity cost, and opportunity cost is just a fancy way of saying what we could have done with that money had we not spent it on this thing. For example, he said that Granny spent $100,000 for her home and then sold it for $1 million 50 years later. That's awesome. The S&P 500 has statistically brought an average of 10% per year with dividends reinvested, so had Granny put that $100,000 in the S&P 500 instead, 50 years later, she could have had $11.7 million. Now this is obviously oversimplified, but it shows that we definitely want to do some extra digging when we're trying to figure out what might be the best investment. And before I get to the most important aspect of this debate, here's a free way to get started and be able to earn passive income from the sponsor of this video, Kindle Publishing Income. Selling ebooks and journals on Amazon is such a solid way to make some extra cash. I have students who do this easily without having to write any text themselves. They've never had experience with selling books and they don't have any graphic design knowledge. The huge news here is that you're gonna have somebody that's gonna be able to guide you step by step as you do this. With my link below, you get access to a totally free webinar where you'll learn everything and see if this is for you. I highly recommend checking out Sophie Howard at Kindle Publishing Income. In this free webinar, Sophie will teach you everything step by step and help you start living your dream with a passive income business to make thousands of dollars per month. Once you get it all set up, it's a largely automated income stream with little or no ongoing time or effort required, as little as 5 hours per month. Click on the link in my description for this totally free webinar today. Using the money generated from side hustles like that, you can invest even more money into the S&P 500 or into a house.
When I was living here, I kept a very close eye on real estate. And the place right next to me, same square footage, same number of bedrooms, same everything. It would have cost 2.2 times what I was paying in rent. So just to give you an example, if I was paying $3,000 a month, it would have cost about $6,400 a month to own. Okay. I said, you know what? I like renting. If I have a problem, I just text my landlord. I took the $3,400 I would have spent owning when factoring in phantom costs, maintenance, interest, taxes, all that, and I simply invested it. And I made more money doing that than I would have owning.
So in this portion, I hope that you caught those two huge points. One is that he actually saved money. Most people will actually save more money renting each month versus owning. But if you're actually saving $500 per month by renting, the only way you actually get ahead is by investing that extra $500. If you don't invest it, all you're doing is saving that extra $500 and maybe going out and using that money and buying nice things, but you're not actually increasing your wealth. At least with a house, while it's more expensive per month to be living in this, if you go to sell that house, you actually have money in the form of equity, so you'll be able to then use that money to buy another house. With an apartment, you don't own anything, and so if you haven't been investing in assets like the S&P 500 or something, when you go to move out of that apartment, you don't have any money to buy a house with if you want to, and then you also don't have any assets because you didn't use that money to purchase anything. And that other huge point was just straight up peace of mind. Ramit said that by renting, he knows that he doesn't have to foot the bill if something breaks, or he doesn't have to have that hassle on his brain. He can call the landlord and they'll deal with it. If he owned the home and his dishwasher broke, he would have to go out and buy that new dishwasher. But now this next point is one of the most important for the entire video.
What about if you're buying somewhere for the rental income?
That can work. That can work. So owning real estate as an investment can be part of a well-diversified portfolio if you run the numbers. Right now, there's a lot of hype. People go, I'm going to buy a house, and if I don't like it or whatever, I'm just going to rent it out. Okay, fine. But you've got to remember that if your mortgage is $1,000, that's not just the amount you're paying. There's a lot more. In fact, in my estimations, I add 50% to that price. So $1,500 a month, which would include a roof repair happening 19 years from now. We've got to amortize that out. Labor costs, interest, all that. If you can rent it out and make a profit, fantastic. It cash flows, that's awesome. what you discover is that most people who buy a primary residence, the place they want to live in, they buy it because they want it, and then they tell themselves it's an investment. Buying a house can be an investment, but oftentimes it's not. And there are far better, far simpler investments. Here's my key message. I want to make sure nobody misunderstands me. I've been accused of saying buying a house is bad. No, I never said that. In fact, I will buy a house myself one day. And when I do, it's going to be a terrible financial decision, and I'm going to do it anyway. My key message is, for the biggest purchase of your life, you've got to run the numbers. Sometimes buying can be a good financial decision. Often renting can be a good financial decision. Run the numbers and never feel guilty for renting.
So he made the distinction between the difference of buying a primary residence versus an investment property. Most people don't understand that their primary residence, the one that you actually live in, is not an investment. As Robert Kiyosaki famously said, an asset or investment is one that puts money in your pocket. A liability is one that takes money from you. Your primary residence is one where, in order for you to actually live there, you have to pay the mortgage every single month. So it's taking money out of your pocket. If you instead bought a second house or a rental property and you ran the numbers and it was able to bring in a cash flow, now that property is putting money into your pocket or into your bank account. So now on the actual debate of what's better. What is the best investment versus buying a house or investing it in the S&P 500. First of all, when buying a home as a primary residence, this is not an investment because while you live there, you're paying each month and most likely paying more than you would to rent an apartment. When you sell the house, you will get money and you can use that money to go buy another house, but that new house will likely be more expensive, and so all you're doing is shifting one payment for another. So if you really want to compare apples to apples, you have to compare buying an investment property or a second home versus that of investing in the S&P 500. To accurately run the numbers, I suggest using biggerpockets.com, where they have so many free tools on how to calculate the actual price of the rental property, rental income generators, taxes, and everything in between. This has been a huge resource for me in my rental property journey. Recently, there was a housing boom between about 2020 and 2022, where people's houses skyrocketed and they earned a bunch of equity, and I was one of those. But that's not typical. On average, a house appreciates in value about 3.8% in the United States, which is barely higher than average inflation. With owning a house, there's also the possibility of something breaking, like a water pipe or a roofing cost. There's also the headache of tenants, as dealing with people is not the easiest thing in the world. Some pros of rental properties can be cash flow. You could earn a couple $100s per month in actual income, which is awesome. You also have renters paying down your mortgage, so your equity within the house is going up at the same time. You also get some sweet tax advantages that only landlords and homeowners get. As far as the S&P 500, as stated before, on average over the life of the fund in 1957, each year it statistically appreciated over 10% with dividends reinvested. You can just invest your money each month, set it and forget it. It's about as hands-off and stress-free as it gets. But with owning an ETF or index fund, you don't own physical property that you could possibly use to live in if you needed to. So that's the one con compared to a house. The other thing to keep in mind is that just because we say that the S&P 500 has statistically appreciated every year at 10%, that doesn't mean it's actually appreciated at 10%. There are years that it goes down. There's just many years that it goes way higher than 10%. So on average, it's at 10%. My personal opinion is that both are great for different reasons, but that 99% of people should start with a very solid ETF or index fund like the S&P 500 to get started in their investing journey. Then you can eventually buy a rental property for diversification of your portfolio. To see which S&P 500 fund is best, because there's a bunch of them, watch this video now. Or to see the 3 ETFs that I have in my portfolio for the best and most simple investing portfolio on the planet, watch this video now.